Conor McGorrian, your portfolio strategist at State Street Global Advisors. You're interested in value investing, which is something famously associated with Warren Buffett, the famous American investor. But there are different approaches to value investing. So what is yours?
Well, as you know, there are many different approaches to value investing. Our approach emphasizes a fundamental analysis of the companies that we look at. So essentially what we're trying to do is find what we believe to be good quality businesses that are out of favor, down on their luck perhaps for some reason. We do a huge amount of fundamental analysis around the nature of the business to understand the fundamental drivers of it, and then to ascertain, is there a good value opportunity for our clients to invest?
You're concentrated on Europe. What are companies in Europe that you found interesting, maybe even in Switzerland?
Well, we find a lot of opportunity across Europe at the moment. We see many businesses, particularly in the financial sector, where there's an enormous amount of controversy in that space at the moment. Investors are very nervous about a lot of the banks. Businesses like Standard Chartered, Credit-Suisse-Aktie. We see good opportunity there from a fundamental point of view, and we've a lot of those sort of businesses in our portfolio today.
You mentioned banks, but are there other sectors you're looking at in this moment?
Well, as fundamental investors, we look at all sectors across the market to make sure that we're not missing any value opportunities, wherever they may be. But currently within the portfolio, we see more opportunity coming through in the more cyclical end of the market. So we've seen opportunity in the industrial space, in the energy and the material space as well to a certain extent. And conversely, less opportunity then in the more defensive consumer staples part of the market, where we see a lot of businesses that today look very overvalued to us.
You mentioned your fundamental analysis of companies. Now, what exactly in the setup of a company are we interested in? What operational figures are you looking at? Or also what market figures like valuations are interesting for you?
Well, we consider a full range of metrics when we look at our businesses. So we start with the basic financial statements, we review the P&L and the balance sheet, we do an enormous amount of our own modelling around companies. We also have a forensic accountant as a member of our team who spends a lot of time analysing the assumptions that management teams make when they present their accounts to the market. We also spend a lot of time interviewing management teams. We travel across the world to meet them. And when we've done all our analysis and bring all that information together, we can make some assumptions about what we think the long-term earnings potential of the firm is, and then compare that valuation to the valuation in the market today and ask ourselves, what should a reasonable investor be willing to pay for a share in this business on a conservative basis? And that's how we determine whether there's a good opportunity to invest our clients' capital there.
So value investing, of course, applies or targets mostly to long-term investors, but holding periods have come down. So what is your impression? How patient are investors?
Well, it seems to us that investors really aren't very patient at all these days. I think in a world where we're obsessed with financial television and Twitter feeds and the latest news in the market, investors are simply renting exposure to companies and sectors in different parts of the market. As fundamental value investors, we think that to be a true equity investor, you need to be long-term in your thinking. You need to get away from the noise in the market, focus on the fundamentals of the firm, and that's how we've sought to add value for our clients over the longer term.
How often do you pick new shares or divest of shares or leave out shares at all? How often do you make an analysis of the market to change the portfolio of your funds?
Well, our portfolios are typically very concentrated, only 30 to 40 stocks in our spotlight range, for example. So we're very, very close to our portfolios, to our individual holdings. We're also very much driven by our target price discipline. So for every stock that we put in the portfolio, we have a clear target price and a clear set of assumptions behind it. So whenever we hit our target price in the market, we exit the position and we look for a better opportunity with more upside elsewhere.